First question is actually on cooling measures, right? So this is actually a question by Simon. Simon asks, can Swee Yong explain what is the next cooling measure? It is reported that the government may have some measures soon. And I also observe this, right? Because I see in the news about how they say like, oh, maybe property is too expensive now and things like that. What are some of your, outlooks, right? And some of your predictions that you have?
The cooling measures anybody who is able to guess the cooling measure is probably also the person who can guess the next total set of winning numbers. Because if you know when they are announcing cooling measures, you can in fact make a huge pile of money by shorting the stock market. So you short the bank shares and you short the developer shares a couple of days before the cooling measures are announced, and then you'll be able to buy back the shares at a steep discount, right? So unlikely anybody can tell you that there is a cooling measure happening next week or week after. But what I would think is if the index is going to go up by 3 to 5% every quarter for, let's say, 2 to 3 consecutive quarters, meaning that if it is 3 to 5% over 4 quarters, it becomes 12%. That to the authorities, they may think that is a bit exuberant, and so they might then implement the cooling measure. But in what form? Is it a constraint on loans? Is it additional stamp duties? Is it age restrictions on borrowers? All these we wouldn't be able to guess. But a constraint in terms of limiting the borrowing capacity of buyers, that usually works very well, and it also serves to protect the banks from having weak balance sheets.
Thanks, Swee Yong, for addressing that. Again, once to summarize, no one can predict, right? This kind of moves and stuff like that. So, he has given his opinion, and also please make your due diligence based on what you understand and not based on like hearsay and stuff like that. With that, I want to ask you the second question, right, which is actually by Huang Zhiwei. So Zhiwei actually asked, in a nutshell, would you recommend a regular, like an average working person, have kids, family, and stuff like that, to actually go into property investment? So assuming this person is actually of median income, because it seems there's so much mechanics to actually watch out for, right? Timing the market, location, cash flow, tenants, so much factors. So can you just address this so that Zhiwei and the rest of us who are watching this can get better clarity?
I think that's why I'm trying to encourage people to, if you think that real estate is passive income, equal to like buy a bond, if it is buying a Singapore government bond that is 10 years, each of the 10 years you'll be collecting interest, and then it is really passive. If you think that real estate is as passive as that, then you are wrong. But if you think that real estate actually is active management, after you buy it, in between tenants, you want to spruce it up, you want to make it more beautiful. During the time when the tenants are with you, you treat the tenants very well. You are able to and willing to help tenants also improve on your property. And along the way, you also have to pay attention to all the expenses and the taxes. Okay, if you think that real estate is active management, you agree with me, then there is also active investments in terms of starting businesses. You might be very good in the next 20 years. I think content is king, and that's why platforms such as TikTok, platforms such as Instagram are getting a lot of business users. If you invested into a business, if you are a great sports coach, invest in the business of coaching. If you are able to paint a lot, or you are able to research a lot, start up your own National Geographic channel if you are able to create content that will attract people. If you are able to cook very well, start up a YouTube channel to showcase all your recipes as well as your cooking skills. So you can always invest in businesses. You don't really have to get into the very high capital game called real estate. And for lower capital, then invest into the research of real estate investment trusts, or invest into researching property developers, construction companies who are also exposed to the real estate sector and buy into their shares.
Guys, so to wrap up, right, whatever Swee Yong is saying, real estate is just one of the vehicles. Like I mentioned just now, investing in businesses is also a very good idea, be it, businesses that you create on your own or businesses that are out there in the market. Like for me personally, I invest in high growth tech companies, and that has actually been doing well for me over the past few years as well. So there could be something that you want to look into as well. And if you really, really, really want to invest in real estate, and you don't have the capital, REITs is an option that you may want to explore further into as well. But ultimately, there is so much vehicles out there, and just because real estate works for our parents, and generations before, doesn't mean that it is actually the right vehicle for us. Correct? Is that what you are saying, Swee Yong?
Yes, I think Singapore has already reached maturity. So any real estate gains would probably be off. If you gain some money, somebody else might lose a little bit of money, such that overall, the trajectory for property valuation increase in future would be one of a normal, say 3 to 5% type of increase, rather than like our parents and grandparents' days when they can have an increase of 100% over 10, 15 years type of numbers.
Definitely. So with that, right now it's already 9:45, so we really have to conclude this session as well. So and me would like to say a very big thank you to all of you who are killing 120
Cheers.
plus of cheers, who are actually, tuning in to watch this video, so late on a Sunday night and all that. So guys, Swee Yong actually told me he took bus specially today to his office so that he don't need to drive back, because previously he had to drive back in the dark and stuff like that. So he's doing all these things for you guys. So if you really enjoyed this session, right, just type thank you in the chat. Be you are watching
No
from
driving.
YouTube, just type thank you, right? So that you guys he never bring his key, yeah. So type thank you
No.
so that show Swee Yong his appreciation and all that. Yeah. So really, really appreciate your time so much. Thank you everybody who stayed to watch. Thank you Swee Yong also for contributing as well. And yeah. So any last words? No, last words, parting words that you wanna share with us and stuff like that. Please, anything you wanna say?
Parting words are back to my slides about what we should be watching for the next few months, which is this. Pay attention to the employment figures. Job support scheme is tapering off. The home mortgage moratorium might spring up couple of hundreds of properties that will be going into bankruptcy or auction sales. And then the realigned framework might be helping tenants get out of their difficulties, but then the impact is that the landlords would be having to deal with a lot of vacant properties. And the job market is now not so great, but still within 3 to 6 months, we will have another probably 30,000 new diploma holders and degree holders coming into the job market to also look for jobs. So things are not as rosy right now. So let's hunker down and let's pay attention, do our homework properly. Don't be rash.
Yes, definitely. Thank you so much, everyone. Thank you, everyone. And again, if you want to watch the recording of this video, it's actually on YouTube. So do join the YouTube channel to actually watch this recording in case you miss out any part or you want to revisit any specific section. So happy CNY, everybody, or Lunar New Year. And thank you so much once again. With that, we are going to end the broadcast now. So Swee Yong let's say bye-bye to our audience. Bye-bye, everybody.